Alright guys, coming up to 5 o'clock here in London, let's have a look at the main move in the market today. So if we start with the pound, because you had some economic data scheduled for this morning, 9:30, the job report for the UK area. So the market was more focused on the average earnings. So we're expecting 2.3% and then 2.2%. So for excluding and including bonuses, and both reading printed lower than expectation, 2.1%. So we had a bit of a down move. Let me just go on the pound chart here. So as is usually the case, you see a bit of downside before the actual data release. Some people saying that the report is leaked. So you see a bit of market positioning ahead of the data 20 minutes before 9:30. So you've seen a bit of down move, and then the actual move to the downside occurred 9:30, which is this candle that I'm circling on here. If we have a 1 minute chart, is this move here. So we're trading at around 133 psychological handle. Managed to break this one, and then we slowly moved all the way down to the pivot level that we tested around 11:30. Managed to break below this for the rest of the session. But that was the reaction of the pound following the job report in the UK. Other economic data scheduled for the day was the oil inventories this afternoon at 3:30. So let me just bring up my oil chart here. So as you know, when you trade the DOE on the Wednesday, you use the API from the night before as your expectation. So API for last night, let me just transition the screen here. Last night we had the API, let me just refresh this page here. Just bear with me 1 minute. Doesn't want to refresh. In the meantime, let me just have a look at the API reaction from yesterday. So yesterday 9:30 is when we had the API, and we had a small reaction. As you can see here, let me just circle. Slightly positive because yesterday API was the biggest drawdown for gasoline. So slightly positive reaction here seen in the price of oil. And then this afternoon, 3:30, let me just go on the minute chart, make it a bit clearer. So all the four readings, so for crude, gasoline, distillate, Cushing, we had more positive data, meaning that we had bigger draw or smaller build. Hence the positive first knee-jerk reaction to the upside. And then you also had the US outputs that rose by 6%. So that could explain the move to the downside. And then 3 minutes after that, we only recovered. And 5 minutes after the release of the report, net reaction of the market back to zero. So I'd say the main driver, as we covered this yesterday and Anthony covered it in the morning, in the briefing this morning, the hurricane situation and also the different OPEC comments are more likely to move the market these days. And keep in mind that last week the US output was down by 7%. So this week back up to more than 6% is just the correction of the hurricane situation last week. So hence this really limited reaction here in the price of oil. But after that, oil managed to recover the small losses. We were around the R1 level at around 4 o'clock, 48.63 for the day. And then we managed to make new highs and break above the 49 psychological handle. Now we're just hanging around this area, 48.97 as I'm speaking. So that's for oil. And for the rest, all the different assets, the way they move was dictated by the US dollar strength. So US dollar index is up by 0.5% for the session. As you can see here, the euro started to slowly move lower at 1 o'clock, managed to break below the pivot. Actually here, as you can see, you had a good classic short opportunity on the pivot level. We break below the pivot and then it bounces back up and then we go all the way down again. So that's for the euro, and that was helped. So the dollar strength, the dollar recovery was helped later this afternoon when you had some comments regarding the Republican consensus tax plan that is scheduled to be released on the 25th of September. So now we have a set deadline for hopefully more information regarding the tax plan of the Trump administration. So that helps the US dollar recovery and the general risk on scenario that we've seen across all the other assets. So risk on, you see gold. Let me just make my chart bigger here. Gold managed to make new lows, broke below the pivots, broke S1, and then managed to take the low of yesterday. And then now we're just hanging around this area here at 1326. So that's for gold. Risk on is also T-notes to the downside. So T-notes not doing so much this morning, hanging around the pivot area at 126.23, and then slightly hedged lower following the US dollar recovery at the same time. Gold making new lows for the session, and the Japanese yen making new lows as well. So today was a good day for using the correlation. When you see a risk on scenario and you, let's say in a trade for the T-notes, you see gold making new lows, Japanese yen making new lows, at the same time S&P pushing to the upside. As you know, T-notes is one of the slowest moving products, but then when you see all this correlation working out, this is when you can hold the position. And then here, let me finish by showing you the DAX chart here. This morning managed to break above the pivot, not doing too much in the afternoon, or in the midday, sorry. But then when we get to the afternoon, followed the lead from the S&P and managed to take yesterday's high R1, and now we're just hanging around the R1 level as well. And finally S&P at the 230 US cash open managed to trade from all the way down here 89, sorry. Managed to go all the way up to 24.94, so more than 15 ticks during the first hour after the cash open. Then retraced down to the pivot, and now just hanging around the 24.92.5 level. So yeah, that's it for the day. Morning pretty quiet, weaker job report for the UK area, and then after that US dollar recovery that dictated the risk on scenario seen across the different assets. So safe haven, gold, T-notes on their lows, S&P, DAX pushing in positive territories. But just before finish this wrap, let me just have a look at the calendar for tomorrow. Just transition the screen here. That's the calendar for tomorrow. So pretty quiet morning, not too much. And then 12 o'clock, this is when you have the BOE interest rate decision. So the minute release and the vote split. So I'd say we have to pay more attention to the vote splits because market is not expecting any change in interest rate. And then after that, 1:30, you have some US data. So core CPI and normal CPI coming out for the month of August, 1:30. So these data are used by the Fed for deciding on their monetary policy. So obviously, they'll be really important to monitor. You also have some ECB speakers scheduled to speak tomorrow. First one is Merch at 11:45, and then 4:30, ECB Weinman, and then Merch again at 5 o'clock London time. So yeah guys, today an interesting day. Lots of activity in the market. I hope you managed to catch some of the move. You had a good day. Enjoy your evening, and I'll speak to you tomorrow. Thank you.